Welcome students, myself Professor Vikrant Palatsha welcome you in my YouTube channel Professor Vikrant Palatsha's Education Hub. Today we are going to learn the unit number 3 of the Advanced Accounting second recent trends in accounting. So let's begin. Basically it is totally theoretical unit in the syllabus of the Advanced Accounting second. Therefore on this unit no problem will be asked, only theory will be there in your question paper. So let's begin now. So in this unit, the first point, that is the forensic accounting. So forensic accounting is the branch of accounting that deals with the detection and prevention of financial crimes. So forensic accounting is the recent technique that is developed in the area of the accounting which detects as well as investigates and most of all, the most important, prevents whatever financial crimes those are made in the books of accounts. Forensic accountants use accounting, auditing and investigative skills to understand whether a person or a company has committed financial misconduct such as embezzlement or fraud. So what is the basic motto or what is the basic objective behind the forensic accounting is that whatever the frauds, whatever the embezzlement of cash or whatever the financial misconducts are there in the books of accounts, those are detected, those are found out, those are investigated and those are prevented in the future. That is the basic objective of the forensic accounting. Forensic accountant works on a range of activities to investigate financial crime, from analyzing documents to actually speaking in court. So, under the forensic accounting, these frauds, embezzlement, misconducts not only detected but the sufficient proof about these frauds gather and those will be submitted to the court to prove the frauds those are made in the books of accounts. That is the broader work of the forensic accounting. So the forensic accounting is performed in a particular procedure. Under that procedure there are 3 steps. Step number 1 is the investigation, step number 2 is the reporting and step number 3 is the litigation. Under the investigation all the books of accounts are verified and whatever the crimes like fraud or financial misconduct or embezzlement that is find out properly, thoroughly investigation will be done and those all the frauds will be detected under that. That is the first step. Second one is the reporting, means proper authenticated report prepared about the financial crime with the sufficient proofs to prove that fraud by the legal process and in the court. That is the second step. And last one is the litigation. Whatever proofs are gathered during the investigation, whatever the proper report is prepared, now that report is produced to the court to prove what are the financial crimes made in the books of accounts. Okay. Therefore, this overall system of the accounting that is recently added in the area of accounting is called as the forensic accounting. Okay. So it is about the forensic accounting. Now the next recent trend is there and that is the accounting for corporate social responsibility. So every business that is operated in the society, every business grows in the society. Therefore, business is always responsible for the well-being of the society. So whatever the activities run by the business organization without considering the profit to develop the society, that is called as the corporate social responsibility. So corporate social responsibility, that is CSR, enables the business operations to voluntarily interact with relevant stakeholders and assume accountability for its impact on society and environment. The Companies Act 2013 introduced provisions related to the fulfillment of corporate social responsibility. by certain companies, their net worth rupees 500 crores or more, or turnover rupees 1000 crores or more, or net profit of rupees 5 crores or more by making certain eligible expenditure or payment. So according to the Companies Act 2014, now it is compulsory for the companies, if their net worth is rupees 500 crores or more, or if their net sales is rupees 1000 crores or more, or if they have earned the profit more than 500 crores or up to 5 crores, it is compulsory, it is necessary that certain amount they have to expend it on the corporate social responsibility. Once companies cross the threshold limit that I explain you, they have to do the CSR. They are required to spend at least 2% of their average net profit of 3 preceding years in eligible CSR activities. Suppose the company, they have the net worth 500 crores or more than that, turnover during the year rupees 1000 crore or more than that, or they have earned the profit of rupees 5 crores or more than that, they have to spend compulsory 2% of their average net profit of the preceding 3 years on the eligible CSR activities. The CSR activities are carried out by companies in any of the following 3 ways. So according to Companies Act 2013, the companies those have crossed the threshold limit, they have to conducted the CSR activities as per these 3 things mentioned under this act by making contribution to funds specified in Schedule 7th of the Companies Act 2030. That is number 1. Then number 2, through a registered society or trust or Section 8 company, and number 3rd on their own account. So these are corporate social responsibility activities these companies have to undertake according to the Companies Act 2013. So therefore this is the second technique, that is accounting for corporate social responsibility. Now third one is there, accounting for derivative contracts. That is also the recent techniques added under the area of the accounting. So first of all, we have to understand what is the derivative. A financial derivative is a liability. What is that? Liability or an asset whose value is derived from a market price or rate. So financial derivative is nothing but it is a kind of liability or it is a kind of asset whose value is derived from the market price or the current rate. Clear? The accounting for derivatives as per the guide is based on the following key principles. In that, number 1, all derivative contracts should be recognized on the balance sheet date and measured at fair value. So whatever derivative contracts are there, those should be properly recognized and those should be mentioned properly as per the fair value on which date the balance sheet has been prepared. Number 2, if a principle stated in the guidance note are not applied, then it should account for derivatives at fair value and changes being recognized in the statement of profit or loss. So the whatever are the changes during the financial years in this derivative, those changes in the form of profit or in the form of loss should be mentioned in the P&L account properly. If any entity applies his accounting as per this guidance note, it should clearly identify the number A, risk management objective, number B, the risk that is being hedged, and number C, how it will measure the derivative instrument if risk management objective is being met. So if any kind of business entity, they have opted the option of the hedge accounting, at that time they have to maintain the records related to the derivative as per the 3 things. Risk management objective they have to identify, then the risk that is being hedged they have to identify, and they have to measure the derivative instrument risk management objectivity and should check that that objective has been met out. Okay. So what is the haze accounting? So haze accounting is the technique with the help of that the derivatives are mentioned or considered as per the fluctuating values. That is called as the derivative accounting. Okay. The next number third, if any entity decides to use the haze accounting for certain derivative contracts and for derivatives not included as a part of haze accounting, it will apply principles stated at number 1 and number 2 above. So suppose any company, they have decided to use the haze accounting for a certain derivative contract, and for derivatives not included as a part of haze accounting, then principle number 1, principle number 2, they have to follow. And last one is there, adequate disclosure relating to accounting policies, risk management, objectives, and for haze accounting should be made in its financial statement. So whatever the disclosures are there related to the accounting policy, related to the risk management objective, related to the haze accounting, those should be properly disclosed in the balance sheet. Okay, so that is about the accounting for derivative contracts. And now the last one is there, that is the artificial intelligence in accounting. Now everyone is familiar with the AI, and that is the most discussed topic nowadays, that is called as artificial intelligence, and this artificial intelligence is nowadays also utilized in the accounting. So what is that? Artificial intelligence in accounting is currently transforming the industry, because I already told you that everywhere AI is there, so therefore in the accounting also it is implemented, and that is now transforming the industry there. AI in accounting refers to the use of artificial intelligence technologies such as machine learning algorithms and natural language processing to automate and enhance various accounting processes. So what is actually done? So whatever the machine learning algorithms are there, those are converted in such a manner that will produce automated reports of the accounting as well as enhances the procedure of the accounting. This includes tasks such as financial reporting, audit and compliance, fraud detection, and data analysis. So which tasks are performed under the AI particularly related to the accounting? Preparation of the financial reporting, conduction of the audit and compliance, detection of the frauds, and analysis of the accounting data. AI in accounting can help improve accuracy and efficiency, reduce cost, and provide valuable insights and predictions for decision making. So these are the broader advantages of the artificial intelligence in the accounting. With the help of the artificial intelligence, the accuracy and efficiency of the accounting records enhances. It reduces the cost also. It provides the valuable insights regarding to the financial statements, and it provide the proper predictions for the accurate decision making. These are the advantages. Artificial intelligence can perform various tasks related to the accounting such as data entry, analysis, and report generation. So the various tasks related to the accounting, those are in an automated way performed under the AI, that is the data entry, analysis, and report generation. Advanced technology like AI can assist and improve the work of accountants, but they cannot entirely replace them because of their inability to perform essential human skills such as judgment, communication, and critical thinking. So AI will assist, AI will improve the quality work for the accountant, but it cannot entirely replace the accountant because it does not have the human skills such as judgment, communication, and critical thinking. So in this way, this is the artificial intelligence in accounting. So therefore, student, in this video, we discuss the recent trends in accounting as per our advanced accounting second syllabus. In that we have discussed about the forensic accounting, then accounting for corporate social responsibility, then accounting for derivative contracts, and finally artificial intelligence in accounting. So I hope you understood the whatever information I have shared with you related to this topic, definitely it will be useful for your examination as a theoretical question. So I stop here for this lecture, and sir, for more videos you can visit, you can subscribe my YouTube channel Professor Vikrant Palatshah's Education Hub. Thank you all of you.